Good morning, my dear students. Welcome back to online classes. In this class, we have to discuss about the guarantee of a profit to a partner. In the last class itself, we have to discuss that if guarantee has given by the company, that means all the partners who are available in the company, they are given the promise means or they are given the assurance means during that time how we have to distribute the profit, how we have to calculate the deficiency amount, and how we have to prepare the profit and loss appropriation account. But in this class we have to solve one more question with a new adjustments. So if new adjustments is given means how we are going to be solved, like that we have to discuss in this class also. So take one more question itself. So question number 2. Arun and Bharat share profits and losses in the ratio of 3:2. Instead they admit Charu into their firm to 1/6 share in profits. 1/6 share in profits. Arun personally guaranteed that Charu share of profit after charging interest on capital at 10% per annum, not be less than rupees 30,000 in any year. Stop. Their capitals provided was as follows. Arun rupees 2,50,000. Bharat rupees 2 lakhs and Charu rupees 1,50,000. Stop. The profits for the year ending profits for the year ending 31st March 2019 rupees 1,50,000. 1,50,000. Stop. Before providing interest on capital, show profit and loss appropriation account if new profit sharing ratio, if NPSR, new profit sharing ratio is 3:2:1, 3:2:1. Full stop. So this is the question they are given. Now we have to make the solution of this question. Before doing the solution, first we understood the question. In the question, what the information they are given, which is available, which is helpful to our to make our solution. We have to discuss each and every point. So in this question, they are given Arun and Bharat share profits and losses in the ratio of 3:2. So here they are given the ratio, that is 3:2. In the beginning itself they are given old ratio they are given. First we have to mark that. They admit new partner Charu into their firm. Already these two persons has established a firm in their firm. So one more partner is admitted. His name is Charu. Their firm to 1/6 share. This will be considered as new ratio or new share in profits. So if this partner will enter into their firm, means these two partners will sacrifice and they will give 1/6 share in their profits. Here Arun personally guaranteed. So this is the important thing. In the last question, the firm is guaranteed that word they are given. But here Arun, a single partner, personally guaranteed that Charu share of profits, his profit, after charging interest on capital. So this is the new adjustment. So after providing the interest on capital at a 10% per annum, his share not be less than, so they are given not be less than rupees 30,000. So that means these two persons will guaranteed. So not only two persons, single person will be promised to another person that after paying the interest on their capitals, the remaining value what they have to get on that profit, his share not be less than rupees 30,000. That means guaranteed amount is 30,000 in any year they are given. Now their capitals provided was as follows. So their capital details they are given. Arun invested rupees 2,50,000. So in case of the profit and loss appropriation account, we won't consider the capitals. We won't consider the drawing. We should consider interest on capital, interest on drawings, because we are distributing, we are not gathering. So first partner's capital is 2,50,000. Second partner invested rupees 2 lakhs, and third partner, when he is entering into the partnership, his investment is 1,50,000. The profits for the year ending 31st March 2019, rupees 1,50,000 before. So this term is given. So this 1,50,000 they have to get before providing interest on capital. Without paying off interest, the company will calculate a certain profit. That profit is 1,50,000. So we have to deduct this value, and later we have to consider one more value. That value, based on that value, we have to prepare the appropriation account. We have to find out the share deficiency. Now show the profit and loss appropriation account if NPSR is given, new profit sharing ratio is given. So this format they are given, the new ratio is 3:2. Directly they are given in the question. No need to make the confusion. So with the help of this question, we have to follow 3 steps. Under step number 1, we have to distribute the profits among the partners. Step number 2, we have to find out the share deficiency. So if after finding out the deficiency, no need to distribute it, because the single partner is guaranteed, means his share we have to deduct from her share. So based on that, we have to prepare the appropriation account. Step number 3, we have to follow as per the procedure itself. Let's come to the solution. First, solution. Step number 1, distribution of total profits. Total profits rupees 1,50,000. Actually the company will get the profits before providing the interest on capital is 1,50,000. So in that we should deduct less interest on capital. First partner Arun, Bharat. Third partner is Charu. Arun investment is 2,50,000 into 10%, we will get 25,000. Second partner Bharat investment is 2 lakh rupees into 10%, we will get 20,000. Third partner Charu invested 1,50,000 into 10%, we will get 15,000. So actually total interest is 25, 45, 50, 60,000 rupees is the exact interest on capital. So out of the total profits, we deduct the interest, means the remaining value that we have to get, that will be considered as a profits, that is total net profit. Total net profit is rupees 90,000. Out of this 90,000, we have to distribute it among the partners in their new profit sharing ratio. That ratio is also given in the question itself, 3:2:1. If ratio is not given, just old ratio and a new partner share is given, means we should convert the share into the ratio, then we have to distribute it the profit. Now the profits of the remaining partners Arun, Bharat, the third partner is Charu. that is 90,000 into 3 divided by 6, he will get 45,000. Second partner, 90,000 into 2 divided by 6, so he will get 30,000. The third partner, he will get 90,000 into 1 by 6, that means he will get 15,000 rupees. So, like this format, we have to calculate the distribution of total profits. Actually, company will get the profit is 1,50,000. Out of that 1,50,000, we should deduct the interest, because in the question itself they will explain that of before providing interest. So this 1,50,000 they have to earn, but interest is not deducted. Now we have to deduct the interest. So then we will get the actual net profit. In that net profit, that will be distributed between the partners according to their new profit sharing ratio, that is 3:2:1. They will get this much of value. This is step number 1. Let's come to step 2. Calculation of share deficiency. So this is step number 2. So calculation of share deficiency. So here share deficiency is equal guarantee profit minus actual profit. Guaranteed profit minus actual profit. But in this portion, guarantee is given by Arun. So what they are given guarantee means his share of profit not be less than rupees 30,000. So he is making the promise that his share of profit will not be less than 30,000 minus, as it is the symbol, actual profit they have to earn rupees 15,000 only. They have to earn rupees 15,000. But the difference amount what we have to get 15,000 is the share deficiency. So here promise is given by single partner, means we should deduct from the share of the promisee person's share. We have to deduct this 15,000 value. This is step number 2. Let's come to step number 3, preparation of profit and loss appropriation account. Preparation of profit and loss appropriation account. We should draw the columns as per the format itself. So as usually direct method and indirect method, we will have the same format. Profit and loss appropriation account. Should draw the columns as per the procedure itself. You should draw the columns as per the procedure. Particulars amount. Debit side, particulars, amount. Credit side, particulars, amount. Particulars amount. So this is the exact format of preparation of profit and loss appropriation account. So in this account, Step number 1, always we have to transfer opening balance. So for this account, opening balance where it is available means they are given in the question, they earned a profit before providing interest on capital, that is 1,50,000 they are given. That value we should consider as a opening value of profit and loss appropriation account. So by profit and loss account in bracket net profit rupees 1,50,000 rupees 1,50,000. So actually profit. So in this profit we should deduct all the things and we have to distribute it. You will get an equal balance. So in this profit we should deduct first interest to interest on capital. To interest on capital. So here how many partners are there? 3 partners. Arun, Bharat, third partner is Charu. So actually interest on capital we should calculate it in the step number 1, that is 2,50,000 into 10%, 2 lakh into 10% and 1,50,000 into 10%. So they will get first partner 25,000, second partner 20,000, third partner 15,000. By adding these 3 values, you will get net exact interest on capital is 60,000. Is the capital that we have to deduct it or distribute it from 1,50,000. Next, we have to distribute the profits of each and every partner. So in that first partner, Arun, share 45,000. Actually Arun share is 45,000. We should calculate it. But Arun is promising to Charu that his share of profit will not be less than 30,000. That means the deficiency amount we have to calculate in the step number 2. So less deficiency. Deficiency is nothing but difference amount. 15,000. 45,000 is his share. In that 15,000 we should deduct it. That will be sacrificed to some other person because this person is promising to some other person. So actually he receiving the share is 30,000 rupees. Next, second partner Bharat. Bharat share. So Bharat will not promising. So actually what the share of profit they have to get? Directly we should transfer to the amount column, that is 30,000 for Bharat. Next, come to the third partner Charu. Share 15,000 they have to earn actually in that year. But for his getting the promise from other person that his share will not be less than 30,000 means the promise is given by Arun, that where deficiency we should add Arun deficiency, that is 15,000. 15,000 plus 15,000 you will get 30,000. Now we have to close the accounts without any clarification. So 1,50,000 come to the credit side. So here 60 plus 30 plus 30 plus 30, 90 plus 60, we will get 1,50,000. So we will get an equal balance. Like this manner, we have to prepare the profit and loss appropriation account if the guarantee is given by the particular partner. Last class we have to discuss the guarantee given by the company. It should be have a right to give the share to all the partners. But here guarantee is given by the single partner, means we have to distribute the profits according to this manner, and finally we have to prepare the profit and loss appropriation account. So like this manner we have to prepare. So this question belongs to 6 marks question. This time they will be asked for 6 marks for under section C only. So thank you. We have to discuss the one more topic in the next class onwards. So thank you one and all.